Alrighty, we are live. We are live and ready to go. So let me get this shared to the community and then we can go from there, guys. Welcome, guys. Just going to get the stream set up, sending it across all platforms. Got a few people here already. Welcome, welcome. Got a few guys here, a few girls. Cool. We'll give people a couple minutes to settle in, and then I think we'll have a chat. So, yeah, thinking of doing some streams every couple of weeks. Probably on, well, today it's Saturday for me in the morning, but for a lot of people, it could be Friday. We'll call it FullViewFridays, but for me, it'll be Saturday morning. And yeah, just talk through market opportunities. This is a nice little long here for a scalp. We'll discuss that in a second. I don't typically hop up or wake up this early because in Australia here it's 5:30 in the morning, but we will go with it. You know what I mean? So yeah, it's been a while since I've gone on live. I think we'll discuss a few things. Let me just fix this up a little bit. Make that a little bit bigger on the screen. So we can treat this twofold, but I thought what we'd do, have a bit of a chat about the markets this week, a bit of a market reflection, market review. For those that have questions, these are the opportunities, I guess, to ask questions, is what I'd say. And I'd use this opportunity to do that, I guess, would be that, what I say to you. All right, we're back on the charts. So if you've got questions, post them in the chat. So earlier on today, obviously with my Discord, I don't typically post signals. I don't like to post signals. It's not really what I'm about, but I just want you guys to study this. You know, if you trade the PM session and you trade macros, and I know a lot of people do, and they'll say to me, you know, how do I do it? Well, have a look at this. What's not to like about this framework? So, you know, delivering from optimal trade entry here, delivering from a fair value gap. We're bullish overall on the higher time frame. We've got nice low resistance liquidity or relative equal highs at the top here. And we've got a nice inversion with impulse. How could that look in terms of like trade? How could that look? Well, you can enter here. It moves all the way up here, over 30 handles. Your stop goes below the bodies. You take like a 1-to-1, you partial, or you just take out the whole thing and you let the rest run if it wants to. If it wants to come down even more, then we'll see what the next end of day macro does. That's what I'd say. But that's a really nice framework. And that's obviously what I mentioned here. This is what I mentioned. So as soon as that candle closed, it looked really nice. I didn't take it. I'm done for the week. Had a really good week this week. So thought I'd hop on, and it just shows that these macro plays will happen in any session. They'll happen in the PM session, the AM session, the Asian session, the London session, in between sessions. You'll get these plays. You'll get these market structure ideas across all sessions, right? So most people here, I'm assuming, are from the Discord. If you're not in the Discord, I've got a free Discord. That's fine. And that was from today. I don't typically do that, but it's something I just do every once in a while. Or even on my Telegram. If you're not in my Telegram, I post there Mostly my chart recaps, my thoughts. Yes, I do have Instagram. Yes, I do have Twitter. I'm not as active on there, but I do post there once in a while too. So check that out. We got a few here, which is good. But yeah, if you guys have questions, let me know. It's been an interesting week so far. I think for me personally, I trade the Asian session. So that's mainly what I trade. And with the Discord, we'll hop on for the London session. But a lot of people this week, including myself, have found the Asian session a lot better. There's been many plays across all sessions too. And something I may start doing, is potentially expanding to New York. But maybe the earlier portions of New York session is something that will be, popping up, I'd say. So realistically, for me, being in Australia, the time zones are a little bit tricky, I guess is the way to put it. So right now it's 5:30 in the morning. I can capture the end of day macro typically, but things before that make it a little bit trickier to manage. And by the way, this will all be recorded and posted afterwards. So if, say, someone hops on late or you've missed a portion of it, then it's all good. It'll be there later. May do this once a week or once a fortnight on this, like on the Saturday in the morning is what I'm thinking. The times could change, so I can, I guess, accommodate for most people. I know for people that are from America, obviously it's the afternoon for you guys. If someone's from Australia, it's a little bit earlier. So I'll kind of try to cater to most people across different weeks. And then we'll go from there, would be the best thing to say. Can I do a recap? Going to trade the last macro. Yeah, we'll see what the last macro does. It's coming up soon. We'll have a chat about it too. Can you do a recap on the opportunities of the day, Asia and London? Yeah, we can do that. So let's go back, right? Now, in my Discord, in the premium, there was a guy that caught a short here. Jay, if you're watching this, you know who you are. And he caught a little bit of a short here. It was a very quick move in Asian session. And the thing is, here's the thing. When you're trading, you don't need to take every single move. And so a lot of people felt in that situation that they missed out. They said, no more sound. Is the sound okay, guys? Let me know. Sound is fine. Okay. Oh, cool. Yeah, a lot of people feel like they missed out on this move. Now, the amount of times that I haven't taken trades that have moved this far is crazy. Right? It's crazy. Welcome, Jennifer. Welcome. And I think the biggest thing to realize is that trades are going to be missed. Trades are going to be caught many times as months and months and years go on. I've caught trades like this. I've caught moves like this before. I also haven't. So I think before we get into the review of just today, I think, accept that you won't take every single trade, but also accept that just because you don't take the trade doesn't mean anything's wrong. It just means you didn't take the trade. That's all it is, right? So it's not bigger than that, I guess. But yeah, today, plenty of opportunity. This one here is a PM session play, which I think is quite nice. It's good to see PM session still holds. And, a lot of the time I like to use ranges, macros, inversions, low resistance. All these things, like on my YouTube, there's plenty there. If you put together all that stuff on YouTube and you pick out the key concepts and then you study that as well and collect the data yourself and you get confidence with that, you've got a really good model or models, if that makes sense. So yeah, today, pretty interesting day overall. Obviously in the Asian session, we dumped there. Trump, tweets, all that kind of thing. But we get that. I mean, the market structure here obviously is quite bearish. When price is, stepping down, we're doing this. We're slowly stepping up, we're pushing down. We're slowly stepping up, we're pushing down. We're slowly stepping up, we're pushing down. So we're following that order flow. And I called this yesterday in my Discord. I called it the Great Cascade. You get that. I've seen that before, many times before. We've seen it in the opposite direction many times before. And I guess in terms of the plays that were available, maybe some people were looking for shorts here. Most people were looking for this swing high to be swept, which we didn't. And it's just one of those things. Sometimes you just won't sweep what you need. You'll get a reaction, but you don't sweep what you need. You don't take a trade and then it moves. That's cool. That's nice. I took an opening range play here. That's something I've been doing lately, trading the first half an hour. But that's a macro play, right? Because assume we swept that high, we come down, we have impulse, we have the macro spools. All of this right here is low resistance. And then obviously price moves down and takes out all that liquidity. Once that happens, just sit in your hands, just be patient, just wait, because there's no point trying to trade here. As we go back up again, right? Here's a good play. We sweep buy side, boom. Zoom in a little bit. We sweep buy side. We have an inverse fair value gap, which gets created here. And I think a big thing that will help a lot of people that maybe are listening to this later or listening now is you don't have to trade every single macro and you don't have to take every single inversion fair value gap. That's really important because you're going to get cooked. You're going to get wrecked in the market and you're going to overtrade. That's what's going to happen. So my advice, if you find yourself trading too much, then just trade macros. That'll be one way to reduce your trades, because even if you're trading, say, Asian and London session, or say London session, you've got 4 or 5 macros, that's it. You're not going to be able to trade 100 times. When you get more experience, then you can consider if you want to take trades inside of macros or between, but use lower risk. So that's a nice trade there, but not so much from there. That's okay, but when the order block gets created right here, when we trade back into it and then reject away from it, that's the safest entry. Low resistance here, here, and here. That's all low resistance. Relative equal lows, all there. That's a nice scalp to the downside. Price pulls back up into that. We come back down. Pulls back up, come back down. And what structure is this following? Well, it's the same structure. We step up, low resistance, and then sell off. So that there was probably what I'd say for the Asian and London sessions. And then leading into New York, I mean, the process is the same. This is a bit tricky, but in New York, you always notice that there's some big moves, right? There's some big moves. If we have a look at what the market's done here, there's probably a macro somewhere here, yeah. Now, here's the interesting part. Like, you might say, well, yeah, I want to take a long, and I like longs from this area. You look out, price is bullish. Okay, we've come back down. We've come back down again. And you might go, look, I want to look for longs. I want to look for longs from here. But the issue I have, and the issue that sometimes happens in New York session, is if you enter like this, your stop has to go quite wide, in my opinion. In my opinion. I would prefer to enter up here with a tighter stop if I believe the draw was higher, and then just take a scalp. Because then your stop can be only 17 handles, meaning you can risk a little bit more. And if it decides to run, you can take a little bit more from the market. That's important. So that's what I'd say in regards to that. What do we do here? We pull back down. Where do we pull back down into? That inversion gap. Where's that inversion gap rest in? Optimal trade entry. Again, from this low to this high. Boom, boom. Right there. So where's another good trade in the New York session? From here. Entry there. Stop below the order block. Maybe do something like this. Don't like that, then you have to wait for a rejection. Push back up. So these are the plays. You want to wait for pullbacks. You don't want to just enter in this chop. You want to wait for pullbacks on there. And a lot of people, and if you're watching this later, I made a video recently. Check it out. It's about how to anticipate reversals and continuations. Well, you know, if you're in discount, we're looking for longs. If we're in premium, I'm looking for shorts. That'll just get you out of so much trouble in terms of what you can look at and what's high probability. Just trust me on that, right? If we don't pull back, if price is just shooting up like this and price is here, why would I want a long again? Why? There's no point. I may as well wait until price develops more and then try to take a reversal. Whereas if price pulls back down here, I can take a reversal, you know, calmly. Or, you know, if you're trading New York session, that's not a bad reversal. Neither is this. And even here, like, I mean, some people may have tried to go short here, but the thing is, the issue is, you ask yourself this, right? If you went short today here from this candle, your next draw on liquidity is like down here. You don't want to be going short and long and then have your next draw on liquidity only a couple handles away. You want to be going short and long, and your next draw on liquidity should be more than your TP. So for example, if you went long from this position, say from this inversion gap. You want to make sure that all your draws on liquidity are more than just one away or a couple handles away. You don't want to just have one swing high and go, oh yeah, I'm going to target that and hopefully it goes further. No, you want to make sure you have lots of liquidity. So yes, it should take the first one, but it also should move to the next and the next and the next and the next. And why does it move so quick? Because all that's low resistance, all that's trend line liquidity. Just an example. And for those that are coming from my Discord, the premium, you'll know that framework here. You'll recognize this framework. That's what we're talking about, Jennifer, right? And those from the Discord. So if you're there, let me know. But that's the framework. Boom. That's the framework. Boom, boom. Macro, cruisy. Same thing here. Pull back, boom. Inversion, macro, 1-to-1, break even. Now we're in the end of day macro, which a lot of things can happen. So that's a little educational thing there for you guys if you're watching. And yeah, I've obviously rebranded. My logo is different. It's funny because that logo that I created was obviously years and years and years ago, a couple of years ago. But someone actually reminded me of something in DM yesterday morning. He said, oh, hey, Ruben, I thought you were going to rebrand. I'm like, yeah, I was. And then I had everything ready to go. I just didn't do it. So the colors have changed a little bit, changing it up, mixing it up a little bit. So you'll see more of those colors. All my, profiles, whatever, on my Instagram, Telegram, TikTok, not Twitter yet, but Twitter today, all updated. London macro dump was premium of Asia range. Yep, exactly. Yep, up here. So you're going to see that if you just use premium and discount, guys, that's one of the core concepts probably ICT's taught in his basic concept videos. That's what you need. You don't need to bottom tick and top tick moves. But if you want the moves that'll run the most, you take the moves that are in premium or discount. If you want moves that are more likely to chop you out or break even you or have more scalpy, then you're going to take moves halfway in the range, which is too risky. Anytime you pull back, great. Anytime you pull back, great. Anytime you pull back, great. And the same will apply. The same will apply. And right now we're just been in a range pretty much all week. So if we go to, say, a 15-minute chart, you'll see, right? We've just been working like this inside a range. And I don't mind that. People from my Discord would know I don't mind that because if I use ranges in my trading personally, then if the market's going to range, it's good. Because when we're in premium, sell, discount, buy, premium, sell, discount, buy, it's easier in my opinion. If we're trending, it's very hard because the market just won't stop. So these weeks and these days, for me, I find it easier in the market. And we'll see what we do. I believe the market's getting a bit more volatile now for the end of day macro, which I haven't looked at for quite a while. But yeah, if you've got your questions, post them in the channel. Is everyone here from the Discord? Let me know in the chat. Anyone here from the Discord? I know Jennifer's here, a few other guys at the start. For most people, yeah, it's Friday. For me, it's Saturday today, so 5:48 a.m. Went to bed fairly early yesterday, woke up fairly early just before 5 o'clock and thought, why not? Because typically when I wake up about 6, the end of day macro has already happened. So it's too late to stream, but why not? All right, so we'll mark out this next macro here, which is the end of day macro, so 350 to 410. And if you're from my Discord, and if you've been watching my YouTube videos, this looks like something, right? This looks like something. This looks like something. Up, down, up, down. Interesting. So we're going to see what this end of day macro does. in order for bullish order flow to continue, you'd need more inversion gaps. So a lot of people go, well, how do you do trend continuations? How do you monitor that? Well, you need more inversions. If you didn't enter here and you didn't take the 1-to-1 and break even, well, you're not going to enter just right away. You need more inversions, you need more order flow to come through. That's the best way to put it, I guess, would be you need more order flow. You need more order flow. So you need to let it do its thing. If we invert up here, great. We can talk through trend continuations. If we invert up here, great. If we pull back, great. No issue with that too, because then a deeper pullback means a potential bigger retracement. So that's kind of where we sit. And in a minute's time, we'll have the end of day macro. And you'd be aiming for these low resistance highs. That's the idea here, right? So the idea with this trade here was, look, we've got relative equal highs. We can look to see if we can trade up there. But even just doing this is a good trade. Even if price goes down here, doing something like this and taking a 1-to-1, that's a great trade. You get 29 handles, or say 20 something handles out of the trade, perfect. That's all you need. You stack that up, and on the days where price decides to run, so what I preach is you take a partial at 1-to-1, you take a partial up here, you probably get stopped at break even. If price on the given day decides to just spool up from here, guess what? You hold a runner, you try your stop. That's how you make more money. That's how you increase your average risk to reward. That's how on the good days you let it run, and the bad days or the average days you take your base hit and you also run and you move and you come back. So you need diversity in trading, and not every day is going to be the same. Patterns will repeat. Have a look, I think it was Wednesday and Thursday, for those that do trade the London session, have a look at both London sessions, how we sweep Asian lows. Have a look at that for study, because that's an important point to discuss, right? So now I'm looking at this range from swing low to swing high up here. And I can mark out the optimal trade entry, but also I can just mark out the halfway point. You can see what price wants to do here. There's multiple inversions. We've just tapped into one there. So ideally, if you're looking for continuations, typically in this situation, I'd be going, okay, continuations to do that. You know what I mean? Either pull back into this inversion or to this one and then look for something else on the move up to participate in. There's always going to be opportunity, but you just need to choose what you want to participate in. That's the main thing. And here's the thing. Some people may have gone short here, beautiful, or short here. There's no wrong or right. If you like the shorts from up here, there's nothing wrong with that either, because the market's going to reward both people. What needs to happen for you if you're watching this and you're like, oh, I still can't find my way? You need to stick to something. You can't keep changing, because then you won't see your model when it works, when it doesn't. You won't get that I guess, you won't get that data collection. You won't get that confidence. See, when I started trading, I started with the 2022 model, and I learned that pretty decently, but I didn't give it enough time. Could I be profitable with that? Yes. Could I be profitable with a breaker model? Yes. Because my belief is that the entry model is just the entry model. That's why ICT will mention he has 80 something ways to get in a trade. Yes, of course. You can get in a trade in so many ways. You can use, for example, just off the top of my head, you could use turtle soup, number 1, normal fair value gap, number 2, inversion gap, breaker, order block, BPR, change in the state of delivery, rejection block, NMOG, NDOG, like all these different PDRAs and different combinations of PDRAs. You could use impulse. See what I'm trying to say? Like, there's so many ways to enter a trade. Enter off the closure above or below halfway point of a wick, treating the wick as a fair value gap. There's all these ways. So entry is not as important, in my opinion, as price market structure. You need to understand market structure first, how the market likes to move between premium, discount, fair value gaps, liquidity. And then once you understand that and you have greater than 50% probability there, then you can determine what entry model you want to use. And what entry model you use doesn't matter, but just appreciate that every entry model will have its ups and its downs, or its good and its bad. some entry models allow you to have an early entry, but that's a risk in itself. So you have to accept that because no entry model is perfect. Same with any strategy, right? And the weeks will fluctuate. For me, it could be 50% one week, 70% the next, 65% the next. And what will change that? What will change percentage? Percentage will change based on how many trades I take. It'll also change based on what risk to reward I go for and the market conditions and the sessions that I trade. And you'll find that too potentially with how you trade. What's your take on the last macro being? So here's my take, right? I'm just going to mark this other one out here down in OTE. Here's my honest take. The statement that I think summarizes how I feel is anything can work. That's my take, my first take, right? But let's build on that, Ross, right? Anything can work. Now, what do I mean by that? You may have heard ICT mention the 315 to 345 macro, but he's also mentioned the end of day macro. He's also mentioned the London macro, the New York macro, the lunchtime reversal, the PM session reversal, the power 3, the Judah swing, whatever it is, right? But what I'm trying to say is that, yes, the end of day often can be quite good. Some people will call it the power hour, the last kind of segment, because obviously orders are trying to get filled, people are trying to do things, big institutions are trying to do their thing. So there can be more volatility in that last hour. And that macro, I guess 315 to 345 accommodates for that. For me, I don't worry too much about, is this the right macro? Is this not the right macro? I just more worry about, is market structure aligning with when I'm looking to trade? And then if there's a macro involved in that, then great. When I used to trade PM session, I used to consider that. And I used to consider both, like 250 to 310, 350 to 410. And then obviously in between there's the end of day macro. Does that make sense? Like what you're mentioning there. So a lot of people have different ideas of macros. Some people will use different times. I've just collected data on these times, and that's kind of why I use these. That's what I'd say. But anything can work. Not to confuse you, but anything can work. If you want to use that, and just study that and collect data in terms of how that looks. 15-minute sweep, looking for inversion, opposing fair value gap, or engulf candle. Yeah, pretty much. And even that's another way to enter engulfing candles, or maybe you're looking for a long or a short on any given day. You look for a engulfing candle, because the thing is, volume is the most important part about all this. When there's no volume, I told this on my Discord, so if you're still here, Jennifer, you'll know this. If there's no volume in the markets, why are you trading it? You know what I mean? Why would you trade here? Just wait. Here, there's volume, so you can take longs and take a scalp. Yes, you may get stopped at break even, but you've taken money off the market. Beautiful. Friday. Leave happy. You want to be trading when there's volume in the market, because then your TP is going to be hit quicker, but also your stop loss can be as well. So you get that instant feedback, which is what you want. You want instant feedback to know if you're right or wrong, and that way you can make adjustments to what you're looking at. The inversion nested in OT is interesting. Yeah, that's down here. See, with props, obviously with a personal, it's different. With props, you'll get cut off at 410, right? So typically, if you're trying to trade the end of day macro, you kind of need something to happen in this first kind of portion. And then obviously every hour, this is maybe something if you're watching, and later on too, the hourly candles can produce impulse, right? You see it in all sessions, by the way, not just because of news at 10 o'clock, say in New York session, but you'll see it. AM, PM, whatever hour, you can see impulse, especially 2 a.m., 3 a.m., 4 a.m., 5 a.m., and so on and so forth. I find Fridays 3 to 4 p.m. rough. Basically, I stay out. Yeah, that's cool. This will just be interesting to see if we do this and then we push up. But you need an entry model as a thing. So this is just, at the moment, a little bit of tape reading here. Looking to see what price wants to do. But it all comes down to what you want to do. That's what I'd say. So the way I trade, even people in the premium, they all trade slightly different to me. I don't necessarily want to make carbon copies of me. That's not my idea at all. Even from YouTube, if you're watching free on YouTube, I want you guys to maybe use what I've developed and what I use, but then put your own spin on that. That's probably the most important part about it. So I've got people in the Discord that use new day opening gaps, first presented fair value gap in London session. I've got people that use change in the state deliveries, 15-minute fair value gaps. Other people use OTE. Other people use power 3. Other people use combinations of things that I like to use. But there'll be days where everyone trades very similar. There'll be days where people trade differently. I think it's important, whether you're in a community in mine or another community, doesn't matter, or doing it by yourself, that you choose a way to trade that suits your style, because everyone's style will be different at the end of the day. And everyone's risk tolerance is different too. Different styles of trading, different ways to manage it. And obviously, people will go, well, what if we break past this low, Ruben? Well, there's no trade. It's all good. You just have to let the market do its thing, right? When you're looking at a range, and the range is just one way I like to trade, you have to wait to see if we react from that area. If we don't react, there's no trade. It doesn't mean anything's wrong. If we went down 200 handles here, it doesn't matter. It just means there's no entry model. This here is a nice solid scalp here. I like that scalp. I do. I like that scalp for a 1-to-1, right? And then break even. This here, what I call this, if we reverse back up here, I'd call this a trend continuation, if. So you just mark out these areas. And for you, it could be order blocks. For you, it could be fair value gaps. For me, it could be OTE, fair value gaps, inversions. You mark out the area you want price to react from. And then when it engages the area, you see and you watch to see if there's a reaction. If there's a reaction, then you look for an entry model. If the entry model is starting to form, you just consider, do you have liquidity to target? And if all those things are ticked, you take the trade. Win, loss, doesn't matter. That's your strategy. That's your rule base. You take the trade, you move on. If it wins, great. If it loses, who cares? You come back to the next trade. You'll build confidence by taking more losses. You'll learn more by taking more losses. That's what I'd say too. You'll learn way more by losing than winning. Because winning a lot of the time, you'll go, oh yeah, great. But losing will cause you to, I guess, think about what happened and maybe what you did, if there was anything you could have fixed. And sometimes there's nothing, you know? So say, I'm just giving you a hypothetical example here. If price came down like this and then closed up here, for some people, they'll be using that as an inverse entry. And if price then did this, I think that's a good trade. There's nothing wrong with that. If price closed up here, you know, create an inverse, nothing wrong with that. But a lot of people would go, well, oh, I must have done something wrong. You know, the trade hit my stop loss or whatever it was. But not really, right? You're just following your system. And a lot of people that I may work with, they'll ask me, they'll say, what did I do wrong here? We'll have a set of rules that they're using, or like the strategy they're using. There'll be nothing they did wrong. If someone said to me like this, hey, Ruben, I entered a long position here and I got stopped to break even. Did I do anything wrong? I still wouldn't say no, or sorry, yes. I'll just say, did you consider taking a partial? Because typically at about a 1-to-1, we'll look for partials. And if that's not your strategy, if your strategy is to go for a 1-to-2 only, then that's okay. Everyone's strategy will shine in different conditions. But when yours doesn't shine, accept that it just won't shine. It doesn't mean anything's wrong with it, but if you have data collected on it, it's fine. So it's a really important lesson. Obviously, for those that are coming into the free Discord, have a look in there, have a chat, introduce yourselves. There's a newsletter I do every week too. Usually Wednesdays, I'll post it Wednesday to Friday. That's free too. Just a market review. You can look at that in the Discord or in the description of this live video. That'll be there too. So that's all for free. Obviously, YouTube's for free. Plenty of information out there. And I will be posting a new video over the weekend, which will be in terms of liquidity sweeps. So what I do every Friday now is I've been opening up a channel here, and I may as well show you, but it's called this, right? And long story short, this is where FullViewFridays. This is where if you come in every Friday up until the next couple of hours, to be honest, I'll open this, ask me a question, I'll answer, and then I'll shut it. The best questions every week, the best couple, and there wasn't much last week, but the week before there was, I use those now for YouTube videos because a lot of people want the same thing. So for example, You know, someone asked here about this. That's the last video on YouTube. The next one is going to be this one. This is the next one about the continuation. Sorry, the sweeps of liquidity. That's the next one. So yeah, get in there. That'll be every week. That's an opportunity. Obviously YouTube, that's there as well. That's an opportunity. So keep that in mind. For the 250 to 310 macro, could you explain why the OT was drawn from the 1115 low, not the 950? No, yeah, okay, cool, yeah, I gotcha. So for the 250 to 310 macro, which is this one, K-Bear says, can I explain why the OT was drawn from the 1115 low and not the 945? Good question. So the way I see it, I'll make this quick and simplified. There's two swing lows there, and there's two swing highs here, right? To put simply, in the market, there's always going to be many, many, many ranges that exist. Bigger ranges and smaller ranges. So I typically like to start from the smaller range first, and then the bigger range if I need to. Even if I didn't draw it from that low, and say I got rid of this, and let's assume I pulled a fib from this low to that high, I still personally would use the fact that price dipped below the halfway level. Does that make sense? So for me, OTE is just a very deep discount. But the fact here, even if you did that, the fact that price on the bigger range, that's the bigger range, the fact that price pulled below the 0.5 and it swept sell side is still enough. Does that make sense? So I wouldn't get too caught up in it. You can do that. You can do that too. Like that or like that. I start with a smaller range. If price would have come down lower, I just would have expanded this like this. Now, this low sweeps sell side. This high sweeps buy side. So that becomes a dealing range. But also, if I do this low is important to me because that delivers from a fair value gap. So I'll just start with one and then work with the next, and that's it. And yeah, it doesn't look like there'll be any entries here to go long for this end of day macro. So what I would have been looking for is, yeah, price pulls back, invert something, then take a continuation. But hopefully that makes sense. A good question though, very good question. But that's the thing, yeah, a lot of trading is up to the individual. And I think too many people get caught up in the technicalities. You've got to focus on the core concepts first. Focus on the on the dealing ranges, focus on the impulse of candles, focus on market structure. If there's something you want to learn first, it's market structure, then learn an entry model. Don't just rely on an entry model. An inversion gap is nothing without market structure. A turtle soup is nothing without market structure. You can't just buy or sell any random high. It needs to be, contextualized to the situation. But that's kind of the framework. And yeah, a few opportunities this week. Next week it'd be interesting to see. A lot of people know, like, I don't do forecasting, even in my premium. I may post in the morning in Asian session a little bit every now and again. And in London session, we go live for London session and we talk through the market similar to this. But for me, in terms of forecasting the future week, I couldn't really care, because for my model, it's really important to flow with what the market's doing. And I know, and most people would know, right, that at market open on Mondays, you can have a massive, massive new week opening gap, which can completely change things. So I find what works better, what makes it easier, but also it allows you to be less stressed. You don't have to worry about, am I going to be right or wrong? Don't need to worry about that. All you need to worry about is how's the market open. When the market opens, what do we do in the first 15, 20 minutes? That'll give you a gauge on where price could move to, or like building a narrative. So daily bias and narrative building, for me, I put hand in hand, but I don't really have a daily bias in terms of, okay, I think the market's going to close here on the day, or I think that the week's going to close here. For me, it's not necessary. For some people it is, and it helps them. For me, I don't need to. In a similar fashion, if it works for you and you like doing, fully top-down analysis from the daily chart, do it. Nothing wrong with it, do it. But for me, I've found I can use mostly the 15-minute chart, the 5 and the 1 minute chart, and still take good trades. Especially scalping the 1 minute chart. It's all fractal, so my daily chart becomes the 15-minute chart. And my entry model comes on the 1 minute. I used to sometimes enter on the 30-second, but now I don't. Now I've just stuck to the 1 minute probably for the last 4 to 6 months, I reckon. And it's been quite fun. How many trades this week? So a few. A few in Asian session, London session. Mainly Asian session for me this week. Something I've been trading is the opening range, which is like the first half an hour of the day. What I've found, and we'll just go back in a sec, is when there's a volume and there's a market structure, there's a way to trade. And that's why a lot of people have success even trading the opening range of maybe New York session, right? But most were taken during the Asian session this week. London session, a couple, but there was still streams with the Discord. Overall green week. A few break-even sessions for sure for London, or like what I'd call break-even, like small winning sessions, like might be $50 to $100. A few break-even sessions for sure in London session, and Asian session mainly it's been the first half an hour of the day. Not always, but mainly I've been trading that too. Nothing in New York. A lot of people think I trade New York, but nah, it's too late. Like right now, obviously it's 6 o'clock in the morning in Australia. New York session at open is 11:30. So what I'm thinking of doing in the future is potentially trading this macro here, 850 to 910 into the open. That's what I'd say. And it could be on like the stream on the Friday. Does it make sense? So I want to start doing something on Fridays, FullView Fridays, whether it's a stream or whatever it might be. And that could be a live stream. I know PM session's good because a lot of people use this as a review. But yeah, it's something interesting. But yeah, this would not have even come into fruition. So you look at this, you go, oh, well, no trade framework. That's it. Little scalp here, beautiful, and then the rest didn't produce. Like I said, if price came down here and pushed and closed up here, then yes, longs are in. But now for prop firms, you can't trade anyway. So it's more just market reading. What's your advice for trader who has knowledge but never have a pay or pass funded? Well, there's probably only 2 reasons, and this could help a lot of people. A lot of people have asked this, and even in the Discord here, someone asked this about passing accounts and, getting payouts, right? So here's what I'd say. How many months have you been trading for? That's what I'd ask you first. How many months have you been trading for? And other people might be in this stream too, thinking I'm the same. I reckon there's a few other people thinking I'm the same, Because here's the thing, there's only real two year zero funded pass. There's only two or three reasons why someone won't pass an account. The three reasons, right? Number one is this: lack of knowledge, this one, or this one. That's it. Or a combination of those, right? So all I'm trying to say here is that in the market, if you are strategy hopping, and I'm not saying it's you, but it could apply to people, then your knowledge is going to be down. You're not going to know your strategy well, which means you're not going to be able to apply it well in the market, which means that you're going to be fearful when you're losing, and you're going to be greedy when you're winning because you want to try and hold on to it. You don't have trust that you can, continue. So if you strategy hopped, you got to stick to one. If you haven't, then I'd ask demo trading 70. Okay, cool. Then what I'd say is this: maybe it's not that, right? Because it's been for the same year, so it has to be one of these two things. It has to be. So by the look of it, demo trading 70%, and most people might say the same thing. When I demo trade, I go really good. When I back test, I go really good. When I trade in the live markets, I go horrible. These are the two reasons: fear and greed. And it's interesting that people say that, because for me, I did a backtesting video. You guys may have checked it out. I think it was like a 52% win rate. Typically, 50 to 70% is what I get. So for me, it was about the same. But if you're finding your backtesting or your demo trading is better than your real trading, it's fear and greed and it's emotion. It's these two things, which stem down to maybe two more things here: rushing, pressure, putting too much pressure on yourself, or trading purely for profits and not for the process. And there's a few extensions from this too, right? The reality of trading is this, right? You have to spend money to make money. And a lot of businesses are like that. Trading is a business, right? Unfortunately, trading is not something where you can just get one account and hope that one account, you can just get one account, start learning, and then that one account, everything's going to get perfect. Unfortunately not, because you have to kind of experiment with things and learn and make mistakes, right? That's the first thing I want to say. Also, a lot of people put pressure on themselves to make money because of maybe, you want to make money with trading, and you see people make money with trading. And what ends up happening is the more you chase the profits, the more the market will push you away. It's easier said than done. Yes, I can sit here and say, look, trade from a process perspective, but it's true. The best weeks I have are where I don't spend that much time on the charts. When I'm done trading, I'm done. When I take the base hit, I'm done. When I make 170 on a set of accounts, when I make 390, 380, 600, I'm done. So a big part of trading is accepting that you don't need to have these big hits, and it doesn't need to happen now. Nothing needs to be rushed. You need to have something as well outside of trading that gives you satisfaction, because otherwise, I've mentioned this to a few people, what will happen is trading is your everything. Your identity is trading, which is not good, in my opinion. You're more than just a trader, and so is everyone here, right? You need something else. Everyone needs something else outside of trading that brings satisfaction. So that way, guess what? If you have a losing trade, you're not going to go on tilt as much. If you have a losing trade, you're able to come back from that. Because if trading is your identity, then when you take a losing trade, your identity has been tarnished, and you're going to want to bring back your identity to a neutral state, which means you're going to overtrade, which means you're going to over leverage, which means you're going to lose accounts, which means you're going to be close to passing an eval and then blow, which means you're going to be close to passing an account or getting a payout and then also blow it, which is why a lot of people, they get very close to the milestones and then they lose it. And that kind of describes what you're saying there. And that's another thing too, right? So that you've identified it, which is good. It's a mixture for you. Fear of holding winning trades. Fear of holding winning trades. And when I first started trading, that was my biggest thing. I've told this story to the Discord guys and gals. And when I first started trading, I was aiming for a 1 to 2. That's what I used to do, right? And I used to take it off. Like, for example, I used to risk $1,000 on a trade. This is on a 100K funded account. This is back when my Forex fund was around. That's when I started, right? And I remember entering the trade with $1,000 and taking profits at $300 because I was fearful. Why was I fearful though? Because I had a lack of knowledge. I didn't trust my system. So anytime I saw that money, I wanted to take it out. Oh, I've got money. But then what ended up happening is this, as you described there. You take less from the market when you win, but when you lose, you're like, oh, let me move my stop loss a little bit. Let me just hold into this trade a little bit more. It might turn around. It might turn around. And then it's like a double-edged sword. You're not letting the winners run. You're not cutting your losses short. That leads to unprofitability. That leads to blowing accounts. That leads to overtrading. That leads to more mental pressure, more mental strain. So you have to first have the knowledge. You have to first collect data either through, I don't backtest, but you could backtest or looking at the markets live. And then you've got to go in the battlefield and try it out. Battlefield be in the market and experience the wins, experience the losses and go, look, that worked or that didn't. For example, one big reason why, like say for example today, when price pulls back here, I used to enter off pullbacks like a year and a half ago, 2 years ago. The reason why I don't do that anymore like this is because I want to wait for a rejection in my favor. Why? Because this happens. And so I've learned from that. And I've gone, look, I've got wrecked too many times like this or wrecked too many times like that, so I won't do it. And that's an important lesson. The mental game is what gets a lot of people. And unfortunately, that's what it is. Everyone will switch at a different rate. But you know what? Like I've said to a few people, I still make mistakes. People still make mistakes. You may still, reflect on the week and go, look, on that particular day, maybe I could have taken a partial. On that particular day, maybe I could have, mitigated my stop loss a little bit. No one's perfect. Anyone preaching being perfect is not a trader, right? Because people still make mistakes. But what you'll notice, say I make a mistake or say I would enter a position where I go, I probably could have taken a partial and I got stopped at break even. For some people, that might cause you to go on tilt. For me, I'd wait for the next opportunity. Does that make sense? Or for some people, they might lose 3 trades in a row. I've done that before. I've lost 3 trades in a row. It's happened. I've lost 4 in a row. It has happened to me. But are you able to still trust in your system? That's the key difference. That is the key difference. When you're winning, it's easy. When you're winning, trading is easy. But when you're losing, that's when the game begins. That's when it really starts to show how much trust you have in your system and how much balance do you have. That's what I'd say. And you'll find a system, right? Everyone will agree. Like you'll find a system in terms of, I guess, what works for you. Because what I do with risk management won't work for anyone else here. It could, but we don't have the same brain. We don't have the same personality. So for you, you might want to go for a 1 to 2. For me, I may want to take a partial at 1 to 1, or maybe try to hold to 1 to 1.5. But what I do on different days will depend on what I see in the market, and what I see in the market may be different to what you see in the market. So you have to just collect data on a certain thing and then stick to that for at least a month. And then if you want to change a variable, change one variable and then do that for another month and see what happens. But you need a lot of time to do that. That's the thing. And that's why rushing the process is not what you want to do. It's not favorable, because if you rush, if you trade from I need to make this money, then you're not going to trade good. It's just not going to happen. You know what I mean? You're going to be in a position where, I need this money, I need this money. You're going to make silly decisions. And when you lose, when you're down, you're also going to overtrade. If you trade as a side thing, I'm going to try and make this work, and you've got other things that bring you satisfaction, then if you lose or win, it doesn't matter. It's not your identity. That's a really important lesson that I've learned. But that's, good questions. And a lot of people can probably resonate with that. And, I appreciate that, because everyone's been there. You know what I mean? I've been there. Everyone's been there. Every trader has been there. Every trader, when they learn, has made mistakes. Every trader has blown accounts. Every trader, including myself, when I'm learning the process, when I was learning the strategy, yes, came close to passing an account and then see you later. Came close to the first payout and then see you later. It happens, right? And I guess when you have to give yourself the chance to recover from these things is the main thing I'd say. If you don't give yourself the chance, then you never prove to yourself you can come back. Does that make sense? And you know that the only thing stopping you from getting to the next level is you, right? A lot of the time for you guys, it's not the strategy, it's the individual. And that's why so many strategies can work. That's why, some people can use VWAP, or some people can use, breakout strategies, and some people can use support and resistance, and some people can use ICT, some people can use volume profile, bear flags, bull flags, all these little bits and pieces. Why? Because they've mastered that system. That's the main reason why. That's what I'd say. But yeah, any more questions, guys, leave them in. I'll stay on for another 5 minutes and I think I'll hop off. And we'll bring on the weekend. But this live stream will be recorded. I'm pretty sure they upload it straight away to YouTube anyway, so that'll be on there. If you're not in the Discord, join in. I've got the free section here. Have a look. Telegram, have a look at that. That's fine. Instagram, Twitter. Don't really post too much on Twitter, but I'm going to start posting there, just my thoughts. Yeah, it is hard. Like, to control anything, it can be hard. But that's the most blunt advice I can give to people is you'll know what is stopping you, whether it's psychology, whether it's trading, like knowledge or fear or greed. The sooner you fix that, the sooner you'll be profitable. And here's one thing too. If you find yourself breaking rules once a week, make it a goal just to follow your rules for 1 week. Just 1 week. If you can't do that, you got to work on yourself. Just 1 week. Just 1 week, 5 days. Next week, just 5 days. Stick to the plan and see what happens. Now, I'm not saying you're going to win every week by doing that, but guess what? Your losing weeks will be much smaller. If you stick to your rules, trust me, for 1 week, your losing weeks will be much smaller and you'll feel much better, which means the next week you're going to trade much better too. Yeah, and a lot of people are there. You guys have a good weekend too. And a lot of people are there. You know, I was in that framework too. The only reason I started getting payouts is because I started letting the winners run, cutting the losses short, accepting that I'm not going to be right all the time. And when I did make mistakes, trying to take a step back, literally a step back from the computer, literally like a step off the chair, a step away from the computer and go, okay, do I still see something? Do I not? Physically stepping away from the markets. So you got to work on that, and everyone's in the same position. Everyone's in the same position. Psychology is an individual thing. I can talk about it all day, but in reality, you got to make the choice, and you got to do it. You got to trust in yourself enough and trust in your model enough to do that. And what do you have to lose? Like, think about this. What do you have to lose? You stick to your rules for 1 week. Are you going to be any worse off than maybe you already are? No, right? So a lot of people go, well, I can't do it all. Like, I keep breaking my rules. Well, if you do it for 1 week, are you really going to be in a worse position? No. There's no chance. There's only a potential that you'll be in a better position. There's a chance. It may not be, but there's a chance. And if there's a chance, you may as well take that. If it's a chance to work out in your favor. So that's what I'd say. But yeah, great having you guys here. Interesting day today to discuss. Little long position there. And yeah, once you're up in the Discord, if you're watching this maybe later or still in there, there's all the channels. So if you trade the NASDAQ, post your charts in here. If you trade Forex, post in here. I'll post in Charting Study every once in a while. There's a nice little checklist here too from a previous video. That is quite a good one in my opinion. So check that out. And then realistically, yeah, over here, I mean, calendar, I'll post it every week. That'll be posted probably tomorrow. Some notes here, a few bits and pieces. But yeah, that's that. I'm going to call it there. I hope everyone has a great weekend. Use this opportunity to study over the weekend. Take time to relax and do that. 1 week, 5 days. If you're struggling, 5 days, follow your rules. And trust me, the outcome will be better than if you hadn't followed your rules. Trust me on that. Until next time, guys, we'll talk then. All the best. Have a great weekend.